All right, y'all. Welcome back to yet another episode of the Unframe of Mind show. Today, I've got a special guest, Mr. Jim Mosquera. He's actually the author of a number of fictional books that, as you might be able to tell from our conversation upcoming, that they may or may not be so fictional one day. So, Jim, I'd like to welcome you to the show.
Daniel, thanks for having me on today.
Hey, not a problem. If you could just kind of introduce yourself to the audience and tell us a little bit about who you are and give us maybe a brief synopsis of these books here that you got that you're working on right now.
Sure. My name's Jim Mosquera. I am originally from the Isthmus of Panama, where the Panama Canal resides. A lot of people know where that is. Came to the United States many, many years ago and pretty much grew up in the United States. But one thing that a lot of people don't know about me is that English is not, or was not, I should say, my first language. Spanish was actually my first language. So the first time I heard English, it was kind of freaky to hear somebody saying, hi and hello and some other things like that to you. But
oh wow, I would never have guessed.
Professionally, I have a couple of degrees in industrial engineering, and then my professional career took me in the telecommunications world, data networking, that kind of stuff, things that you would associate with the internet and communication, that kind of thing. After that, I got into and presently in helping small businesses with financing if they are unable to obtain financing from the commercial banking establishments, and also with debt restructuring. So after the 2008 financial crisis, the banking industry in this country changed forever. Right. And Congress and other institutions applied regulations to the banking industry, and intentionally to protect, obviously, consumers and others. But the unintended consequences of that has affected small businesses who are unable to obtain capital the same way. So a niche industry sort of developed after that to cater towards the small business entity. I started a few years ago to write a financial newsletter because I started seeing some of the things that were going on post-financial crisis, and did that for a little while. Published a couple of books, one in 2011 and then another one in 2015, that talked about the financial crisis, the economy, some things that people needed to do to protect their investments because the bubble that had popped temporarily in 2008 more or less got reflated again. And so I don't think that a lot of people really recognize that. So I talked a lot about that. Last year, I published my first of a nonfiction series under the character name of Chandler Scott. He's my hero, my protagonist. And as you were mentioning in the intro, that series is really, really interesting to me because I took it out a few years into the future. Made the three books very, very realistic. The reader commentary, I think that's most common thing that you'll probably see in reviews is how highly realistic it is. And to your point, it may be that at some point some of these things that I characterize as fictional in the books will not be. And the three books are characterized by politics, financial crisis, and cyber terror, which are things that we've had some taste of that over the course of the last few years. I suspect we're going to see more of that. Obviously, the politics is really hot and heavy right now.
Oh, absolutely.
And so these are themes that in a few years I think will become more intense and people will pay more attention to them. So that's one of the reasons I wanted to get the book series out now ahead of all that. To kind of the books, I mean, they entertain for sure, but secondarily, I wanted to tell a story, if you will, and send some messages throughout some of the characters. And some of the people that have read it have said, hey, you've kind of made these points through these characters. I said, well, if you got that out of the books, then you certainly got some of my intentions.
So is it safe to say that it's modeled after, say, or not necessarily modeled after, but it's similar to Ayn Rand's Atlas Shrugged, where there's it's a number of messages that are being put forward, number of arguments are being put forward, but it's in a fictional context. Is that pretty fair?
I'll send you the check for $50 here a little bit later. Great, great setup. I don't reveal that to people when I talk to them, and it's really I don't want to say like I'm Ayn Rand, but as you mentioned with Atlas Shrugged, and if people read Atlas Shrugged or The Fountainhead, she transmits messages through some of the characters in the storyline. I've done the same thing. Perhaps more subtly, I don't know, maybe less subtly, but you're absolutely right. There are some very pointed themes that are made in the books.
Okay, that sounds fantastic. One of the specific topics I was curious about especially with your experience in finances and that kind of thing. See, one of the things I like to, I don't really like to, but one of the things that I'm noticing is we tend to be moving toward a financial collapse, specifically of the U.S. dollar, I believe, and I think there's been a number of things that have been going on lately to try to kick the can down the road and kind of prevent it from happening. And it's one of those things that the longer we wait to address the issue, the worse it becomes, much like a heroin addict that's just constantly being injected with drug. It becomes incredibly difficult to get off. Is that something that you see us heading toward in our current state, or do you feel like maybe there's still some time or some hope? And what can we do to fix it?
Yes. The thing about crises, and I patterned the flow and effect of crises in my 3 books of how crises actually evolve, because crises tend to evolve very slowly at first, and then they occur suddenly. And then when the crisis is occurring, people are kind of surprised that the crisis is actually occurring. But I liken it to, if you look at, you're looking at a mountain, and on the side of the mountain, you see the snow accumulating. Now, you don't know which snowflake is going to eventually cause that avalanche, right? Now, and they tell you, well, you might not want to ski in this area because there's an avalanche danger. Now, you may ski in that area today and nothing will happen to you. Tomorrow, the same thing could happen. And so the setup is exactly as you talked about, is that the can's been kicked down the road. So the snow that's packing on the side of the hill is just getting bigger and bigger. Which particular snowflake is the one that's going to cause to initiate the avalanche? I have no idea, and neither does anyone else. And that avalanche will be caused when there is a loss of confidence, and that's something that I talk about in my nonfiction books. I have like 4 economic laws that I postulated, Jim's economic laws, and the first one is
Good Lord, Jim, is there anything you don't do?
Well, and the first one is that credit equals confidence, and you don't issue credit unless the creditor is willing to lend and the borrower is willing to borrow. And that equation has worked pretty darn well. It experienced a major shock in 2008. There was a recovery from that, but a lot of those same things still exist. And I'm glad you mentioned the thing about the dollar, because our problem is not necessarily say, well, the dollar is doomed to failure and so forth, because my argument that I use when people cast aspersions against the dollar, and the dollar per se, is, okay, well, what other currency in the world would you rather have? Or what other currency in the world is better? And the answer is, there is no other currency in the world that's better. Now, that doesn't mean that the dollar is not without all kinds of flaws. And on my nonfiction books, the very, very first chapter, the very first thing that I talk to you about as a reader is money. And we have such a flawed, defective currency unit that we call the dollar that it causes a whole host of ills that I outline in my books. I kind of mention those tangentially in the fictional books.
So let me interrupt you there.
Yeah.
So let me make sure I understand this correctly as far as the fiat currency that we are currently using. It's probably less money and more of a loan or a credit. Is that?
Well, if you look at a dollar that you have in your pocket, those green pieces of paper, right, they're nothing more than debt. And if you pull it out and it says, this, I think it says, I have to read what it says. It says, this note, is legal tender for all debts, public and private. And that's a Federal Reserve creation. And if you look at what a dollar meant over time, and I talk about this in my nonfiction books, the definition of a dollar changed. And that's where that defect comes in. And this is a very, very sneaky sleight of hand, insidious sleight of hand that most people don't realize. And again, as I mentioned, it causes a whole host of ills. But by the same token, it allows governments to not really have that same discipline for their fiscal spending. And when I say governments, I don't just mean the U.S. government. I mean all governments.
Oh, absolutely. It's kind of, it comes with the territory anymore.
Right, and but the what the U.S. government and what the U.S. population has as its benefit in terms of the fiat currency world is that in 1945, after the end of World War II, all of the victorious countries, I guess, and non-victorious countries got together and they decided, hey, we need to have an international currency standard, and it was called the Bretton Woods Agreement, which said, okay, that everything's going to be relative to the dollar in fixed terms. But here's the linchpin of the agreement is that the dollar then is equivalent to X amount of gold. Well, that worked really well for about a quarter of a century, from 1945 until 1971.
1971, yep.
And as I mentioned in my nonfiction books, that's when Tricky Dick Nixon did what I think was the most impactful thing of his presidency, and it had nothing to do with Watergate. He decided unilaterally, okay, I'm going to sever the United States from the Bretton Woods Agreement, so no longer will foreign governments be able to show up at the Treasury and hand us dollars and we hand them gold. Well, since that time, currencies have floated against one another. And I can actually show you, I've shown with charts that there's so many things that changed from an economic perspective after that point in time. And so 71 is a very important point for me. 1982 is what I call the start of the great credit ride that we've had in our economies. And so anyway, long story short, what you mentioned in terms of having the dollar as the fiat currency, it is a fiat currency. It's the best of the fiat currencies, but all fiat currencies at some point, the lifespan of fiat currencies historically is not good.
And it's still based on the confidence that it is still worth something. And once people lose that confidence, then what happens? I imagine that would be, like you said, that moment when it happens very quickly. Where
it happens very quickly. And in 2008, what you saw was a lot of people, a lot of banks and larger financial institutions realized that there was a problem. And so then everybody heads towards the exit at the same time, and they demand cash. And right now, cash, particularly in recession and depressionary periods, cash is king. And so that's one of the things I talk about in the books is as we move closer and closer to this point in time, which I think we're in anyway, it's really, really important to have cash, because during these periods where the confidence is gone, which means the credit is gone, everybody heads towards the exit. People want to get paid. Well, what they get paid with is they want cash, right? They don't want more credit. They want cash.
Sure. Now what's sad is it sounds like you're incredibly well educated on this subject, and I'd like to consider myself relatively well educated on a number of aspects as far as how the U.S. dollar actually operates and works. And what really saddens me is the degree to which most people don't even understand. They do understand I've got a dollar and this dollar represents a dollar worth of value, and I trade it, just the real basic trade back and forth aspect of it. But as far as the past history and how it actually operates in the background, it's a little scary that people don't seem to understand how that actually works. And I think if people did, I think that you may end up seeing a total loss in confidence of the U.S. dollar.
Well, and that's what I tried to do, Daniel, with my fictional series, is every once in a while you'll have an injection of one of the the main character, he's a journalist, but he has these mentors that he interacts with, and the mentors, are smart people, and they imbue him with knowledge about different financial things because he's a financial journalist, and he covers politics and financial matters. And so his mentor, his prime mentor, along the way, you see him kind of educating about certain things. So in the very first book, for some people, they'll think, and it's a fair criticism, that maybe the first half of the book doesn't move as fast as it can. And that's actually by design, because I wanted to transmit, like you just said, certain types of information. So while people are being entertained with the story, they realize, oh, I didn't know that, right? And then they can kind of continue on.
Okay. So is your journalist more of a modern day mainstream media type journalist, or is this one an actual honest, non-partial journalist?
He actually would fall more into the latter category because in the first book, he's working for a large international news network that's based out of Argentina. So it's not based out of the United States. So their take on things is a little bit different, right? They're not as beholden to American politics because they're not based in the United States. Over the course of the 3 books, in the second book, he works as an independent journalist working on a documentary with another journalist. And then in the last book, he actually is approached by an organization that I created called Veritas, which is Latin, I guess, for truth.
Right.
And so he goes to work for this organization again as an independent journalist. And so there yet is another message that's being transmitted throughout the 3 books is his evolution, if you will, as a journalist, as he gets more and more, gets away from the mainstream and gets more and more independent.
That's awesome. So I guess my next question would be, see, I had actually called up my 401k provider and just tried to start asking questions about, okay, so assuming a collapse of the U.S. dollar, is there anything I can do to kind of hedge against that? Is there any kind of funds that we can move money into or anything like that to kind of act as a hedge against it? Something that would go up as the U.S. dollar went down to protect me. And they kind of almost answered me like they had no idea what in the world I was even talking about. Like I was talking crazy. And I don't know if that's because they genuinely didn't know what I was talking about, or if they just don't have anything for that, or
well, yeah, and I can explain that from this standpoint is that path, that thought path, if you will, is not part of their calculus because they're not trained that way. And I've dealt with a lot of financial advisors over the course of time, independently as a client and also just kind of as an observer, talking to them, interacting with them, and so forth. And so they're not going to tell you anything like that because it would steer you away from conventional investments, right?
And they make their money off.
Exactly, and that's completely understandable. So I'm not casting aspersions against financial advisors, but to your point, moving forward, as I mentioned, cash is going to be really important. So even though you may not like the U.S. dollar because it has these defects about it, there will come a time, probably not in the too distant future, where cash is going to be incredibly important. Now, what happens after that is going to be really, really interesting. And that's where it would be nice to have a crystal ball, because if you do have this kind of tremendous loss of confidence in fiat currencies, well, when things like that have happened before, let's say in other countries, you may just see zeros added to the end of a piece of paper. Sometimes, like they did in India here not too long ago, they said, okay, well, bring us your old money and we'll just give you some new money. Sometimes it's done to supposedly to combat the war on, fill in the blank. So what's interesting and what could happen is after that loss of confidence. So I think this is just Jim's crystal ball. Cash is going to be very, very important going into the next recession/depressionary period, because values of financial assets where a lot of the credit has been funneled into, and I'll just use real estate, stocks, bonds, other types of investment like that, where a lot of the money has flowed, those values will then rationalize back to lower levels. When that happens, there's a rush for the exits. People are trying to sell things to raise cash. So what becomes really important at that point in time? Cash. Then you'll be able to buy things for pennies on the dollar compared to today. Maybe Amazon stock, instead of being worth $1,000, maybe it's worth $100, right? And so now you think, wow, I can pick up Amazon for $100. What happens after that is, I think, is going to be really, really interesting, because if there is a true loss in confidence in the currency units, then the authorities have to respond in several ways. Well, one way is to tie it to something more tangible, like we had in our past, which is some precious metal, whether that's gold, silver, or some combination of the two. That's one. Another is there's kind of another kind of more, I'll call it more of a hypothetical situation where the IMF, which is the International Monetary Fund, they get involved, and I'm actually kind of giving away a little bit of my plot.
I won't tell anybody. I will not tell anybody.
Which is the plot of the first book, which is, you have this supranational organization, so this international organization that has a clean balance sheet. Well, at this point, let's just go forward, and let's say you have a little bit more about that loss of confidence. Well, the banks aren't going to have clean balance sheets. The Federal Reserve or other central banks, they don't have clean balance sheets now. So you have to go to, well, who has a clean balance sheet at that point? Well, there's this organization called the IMF, International Monetary Fund, that they literally can create currency units out of nothing. And so there's a thought process that I have that maybe they get involved and they try to recapitalize, try to create some associations with, and actually they exist today. They're called special drawing rights, or SDRs. And this probably get a little bit too esoteric for this conversation,
yeah,
but
you're almost losing me right now.
There's actually a plot in my first book, Daniel, where I talk about an international organization, again, getting involved because of a loss of confidence and so forth. And so I call it the Global Settlement Bank. That's just the name of the organization in my book. And they get involved. And so they've got to help out the United States and other countries and so forth. So that's kind of like the next stage after that loss of confidence, where, people are going to realize, hey, we need to have more confidence in this thing that I'm using to trade for goods and services called money. What is that solution going to be? And so there's a couple options there.
Okay, so I mean, obviously, I don't hope for a collapse, but there is certainly it's a possibility in the back of my mind. Probably more real than most might consider it to be.
Yeah, and when I say collapse, I want to be clear for your listeners. I don't necessarily mean that this is like Mel Gibson and people are driving along old lake beds and water scarce. That's not what I mean at all. I'm talking strictly in the financial realm, where
as far as
there's a crisis of some sort that occurs and the authorities have to respond in some way,
or we have to figure out some other way to exchange value amongst one another.
Correct.
Okay. Yeah, that's what I'm referring to as well. I appreciate the clarification. But what I'm looking at right now is I'm doing a couple things right now. I'll tell you what those are, and then I'd like to ask you kind of if you think those are good ideas, and maybe if there's something else that we can look at as a possible hedge. There's a couple of things. What I'm doing is I'm taking a small amount of money from my paycheck each week, and I'm buying gold with it. That's one thing. I have a small withdrawal that comes from my direct deposit into this website that I can buy gold from that holds it in store. Another thing I'm doing is I'm actually taking another small amount of money and I'm purchasing Bitcoin right now, which has seen an incredible increase. I don't know if you follow that at all.
I do.
But that's another thing that I'm doing is I'm taking just a little bit. I'm not freaking out or nothing like that, but I'm at least putting some money in there because I know if the US dollar decreases in value or loses its value, that I know Bitcoin and other digital currencies like that are going to suddenly become very, very valuable to people. What do you think about those as possible hedges?
Yeah, so let's take the first one, gold. Gold, as we talked about earlier, I would definitely have a place in the future, particularly if there's going to be some sort of a relationship associated with the U.S. dollar or any other currency unit. And as a matter of fact, that did exist in the past. So it's not. Some people think. Some people cast aspersions against what they consider gold bugs. They think, well, it's. That's a relic of the past, and it doesn't really have any use and so forth. Well, it does.
It was used for thousands of years.
It was used for thousands of years, and even though you'll hear economists right now throw daggers at gold, the one thing that nobody likes to talk about is that central banks are, the largest hoarders of gold in the world, and again, there's a reason for that. So, gold has always been money. It's never not been. Okay. In the future, if there's an association where you want to create a better sense of wealth for the currency unit, gold, silver would be vehicle A for doing that. Now, the issue with gold is, and I'll just say this from a dollar perspective, because again, I'm not in the camp that believes that the dollar is going to go to oblivion anytime soon.
Okay.
The dollar's still going to exist, and the dollar's still going to have some worth for a while. So when you buy gold right now, and gold is what, $12.50 or something like that an ounce right now. So you have to take 1,250 cash dollars to buy that. In a recessionary, deflationary environment, the dollar price of gold is going to go down. Okay, so and we saw this before, and in fact, gold had its peak in 2011, $1,900 and so dollars, and it's at $1,200 now. So just look at that delta between $1,900 and where we are right now. That's a pretty significant drop. And in that time, people would say, well, haven't things, politically more unstable, the dollars? Yeah, but look what happened to gold. So the point is that gold will behave like a financial asset from the standpoint of dollar pricing. So I do believe that during the next recession, depressionary period, the price of gold will go down. Now, after that is a different story. With Bitcoin, I wrote about Bitcoin in my books. I kind of reprised Bitcoin and the whole cryptocurrency theme in my latest book that I released. And what I want to say about Bitcoin and cryptocurrencies is they do serve a great purpose right now from the standpoint of being able to transfer money anywhere privately. You do that outside the banking system. It's not subject to the whims of central banks. It has a lot of similar properties that you would want in a currency, and that, again, it can't be created out of thin air. It has to be mined, of course, electronically. The downside of what I see to Bitcoin and other cryptocurrencies is that you don't really have possession of that. It's an electronic cyberspace, much like most of our money, regular money, is right now. So from the equivalent standpoint of like the monetary base of what you see in the United States, well, a lot of that is not in paper dollars or coins. It's out in cyberspace somewhere. With Bitcoin, there have been, obviously, as you know, hacks on Bitcoin exchanges. There have been other cases of theft. You don't really have possession of it. And probably the worst thing that I see with Bitcoin right now is it's unfortunately falling into the same trap from an investor standpoint, where it's being chased by a lot of hot money. So it's in its own little bubble right now. And as a matter of fact, if you look at some of the price fluctuations in Bitcoin, they've been very, very violent. And some of the people that I've talked to about Bitcoin, if you got involved in Bitcoin a long, long time ago, you're probably sitting real pretty right now. But I suspect that a lot of the and especially lately, when I look at Bitcoin charts, and I've studied a lot of charts of things in my time, it looks, it kind of has that exponential hyperbolic curve like to it. And just the fervor that I see with Bitcoin right now tells me that it's also been swept up in this bubble of financial assets. Now, that doesn't mean that Bitcoin's going to go away and it loses any of its functionality. What I'm saying is that the dollar value of Bitcoin right now probably won't be the same in the future.
Yeah, what I have noticed with Bitcoin is the value does continue to go up generally. It does, like you said, it is very volatile in certain times. But what I'm noticing is that I'm having a hard time reframing it in my mind as I want to be careful not to fall into the trap of looking at it as an investment vehicle where I put in money and I make money because of the growth in it. So
that's
real difficult.
And that's the problem, Daniel, is that what I talk about in my books is that treat Bitcoin as money, but the problem right now is it's being thought of as an investment, and because it's being thought of as an investment, there's all of this hot money going into it. And again, because of the general overall bubble climate that we're in, and I say that about stocks, real estate, especially in some areas, Canada is really just flashing red lights right now. And then, bonds that have been in a bubble for a long, long time, not just in the United States, but if you look at some of these countries in Europe, like Italian bonds have these super low interest rates that are just mind-boggling. And especially if you knew what sort of financial shape that country and the banking system there's in. But so that's kind of what I see with Bitcoin is it's still going to be useful. There's going to be a bunch of other cryptocurrencies that are there now and will be there in the future that I think and I hope will compete alongside other currencies like
the
maybe
US
gold
dollar.
Coins, dollars, et cetera. I mean,
you would hope so.
Yeah, I mean, you want to have that sort of competitive climate, if you will, in currency, just like anything else.
Now, to make sure I understand this correctly, what I've heard is that if you do not have a truly free market until you have competing currencies. And right now, with the U.S. dollar kind of being the number one currency that people deal in for the most part in the United States, and matter of fact, it's illegal for us to create a competing currency, another paper money kind of currency. I don't think we'll truly see a open free market until something like that happens, or until it's, I guess that what's the phrase I'm looking for here? It's gotten a little too big for its britches, and I think once it comes down to I guess I'm having a hard time trying to figure out how to word this exactly because I'm not hip to the lingo, but I guess basically once it inflates to a certain point, and then maybe returns back to normalcy, maybe we'll start to see some more competing currencies actually compete with it. For lack of a better phrase.
If you go back in time, I mean, you used to have banks that issued banknotes, and there was banknote from Bank A, B, C, and so forth, and those freely traded about. If you went back even further than that, during the time of the colonies used like Spanish milled dollars because, and I assume that played alongside, some of the English currency that existed. So all of these competing currencies have existed over the course of time. I mean, they had some real intrinsic value. I do think that you'll see this. I mean, the genie's out of the bottle. So right now, cryptocurrencies exist. They're going to exist. They check off a lot of boxes for me personally. There's some that it doesn't check off. But the best thing would be for the world, the economies, to embrace multiple currencies that people trust, have confidence in, and that can compete against one another. Because the monopoly that fiat currencies have had right now causes a lot of ills, and again, I detail those to a great degree in the books.
And markets actually go through natural recessions and declines and then corrections and things like that. And do you think if that were to happen, if people were to be able to have access to competing currencies, that maybe the recessions won't be so volatile as we saw back in 2007 through 9?
Yeah, you hit it right on the head, is that because we have these defective currency units, it exacerbates the effect of these business cycles that we have. So we're always going to have these business cycles. We're going to have highs and lows in the market. And part of that, which I also detail in the book, is how humans are wired. And so if you take that as fact, that unless we all become Mr. Spock and we all become very rational, logical beings, until and I actually have a picture of Mr. Spock in one of the books, that said you don't think like him, and that's the issue. Because you don't think like him, we go through these ebbs and flows economically. The problem is that when you have defective currency that you use, it exacerbates that wave, if you will.
Well, and it also covers up all the market signals that companies need to see to be able to determine whether or not they need to start investing in more capital, or if they need to start, saving their pennies for the next, because there's an upcoming recession, or, there's a lot of market signals that are lost in a fiat currency system that's exactly really right. Help people out to know what to do. And I think people would be able to get into businesses a lot easier and be able to start up, they would feel a lot more confident and comfortable doing it and taking the risk. But right now you don't know. It's like you're trying to do it with a mask on the whole time. You have no idea if you're making a good decision or not.
That's exactly right.
So, well, that's all the questions I had for you at the moment. If there's any other topics you wanted to touch on, I would be super excited to have you back again. This was fantastic, and I think it gives people a number of things to chew on without getting too overly technical. And I guess that's about all I got there.
Yeah, no, I appreciate you having me on. It's been, a really nice, free-flowing discussion. Definitely would like to be, back on with you and your partner. I just think there's a lot of things that really need what I'll consider more rational discussion, and it's really disappointing to me when I turn on the news, and obviously, we have this political discord, which is fine. I mean, I'm not against political discord, but I just really have a hard time finding a network or a news show that is, let's say more centered. And I talk about this in my latest book. Is called Escaping Oz and Observers' Reflections. And it's just me, looking out and making commentary on a number of topics, because these are things that need to be talked about. I mean, I talk about healthcare in this new book, and the book, I want to encourage readers to take a look at it, because it's written in short article format, and you don't even have to read it, from start to finish in a particular order. I mean, you can hop around, and if you just want to read this topic, okay, but it allows people to have a starting point for rational discussion, because what we're having right now is not rational discussion, and we're coming to a point in time, I think, economically, where the stresses are going to be much higher. And what really should disturb people, particularly those maybe that are listening to this show, is that right now, look at the political discord that we have. And if you look at from an economic perspective, you've got near record low unemployment. You've got a stock market at record highs. You've got interest rates near record lows. A housing market that in many respects has recovered. It's not totally recovered. So there's a lot of economic measures that if you just look at them, they're pretty good, right?
Yeah. I mean, the housing market, like you said, is booming right here in the Nashville area.
Yeah, and maybe it's a false sense of security, and that's okay. But my point is that if you just look at some statistical measures, usually you see this sort of political discord when statistical measures of the economy aren't as healthy, right? And I talked about that in 2009. What happened? You had the Tea Party, and then a little bit after that, you had Occupy. Well, we just came off a bruising 2016 election. It's almost like we're still in the middle of an election right now. Mm-hmm. And yet all of these things, all these statistical measures that I mentioned are very much in positive territory. What's going to happen when these statistical measures, and they've already started to turn down, when they start to turn down and you hit that trough again like you did in 2008? What do you think the political discussion is going to be like then?
You know what? Right now, it seems like one of the main reasons people are so divided right now is because they're constantly being kind of fed this narrative that the other guy is your enemy. It's like government's over here going, don't look at what we're doing. The other guy, look at him. He's the one that's giving you all these troubles. If it wasn't for him, then you guys would be in perfect shape. And they're kind of sicking the left and the right upon each other.
Exactly, and I talk about that in my latest book, and I call it warfare sociology. And so it's a way to split A against B. But what's going to have to happen is at the next trough, if you continue to create that chasm, it's going to make the resolutions of the problems that much harder. And until you, again, the reason I wrote this last book, this nonfiction book, is to just have a starting point for people to have a discussion, a rational discussion. And I throw some humor in there too to kind of inject some levity. But we don't have that political middle right now that we desperately need in order, again, to have rational discussions about how to deal with the problems moving forward.
All right, Jim, I sure appreciate having you on, and I will make sure to link those books down in the low bar here. Is there any kind of place people can reach you if they want to hit you up on social media or email?
Yeah, I would say the best place is to come to my author site, which is www.jimmosquera.com, and that's JIMMOSQUERA.com. That's a good central place to look at all the books, and then it's got connections to social media and so forth. Okay, well, I'll be sure to send people there, but I've officially lost all respect for you because you had to say www. So basically, this whole conversation has been a waste of everybody's time. I'm sorry. Just don't let it happen again, okay? I won't.